Good morning, everybody. Happy Monday. It's April 28th, 2025. Great to be with all of you today. My name is Bob Lang, and it's time for our Daily Bites. We come at you every Monday and Thursday morning, roughly about 8:30 Eastern Time, talking about the markets, what happened, what's going on now, and what might be going on in the not-so-distant future. So quite a week last week, wasn't it? Markets were up pretty strong after a huge setback on Monday. S&P 500 tagged that 5,100 level and bounced off of it sharply and really finished the week off in grand style. If you're a bull, we ended up about 400 points on the S&P 500 above those lows that we hit on Monday morning. 55.25 is where we went out on Friday afternoon. Nasdaq also had a real strong finish as well too. Had a great week and is pushing to the positive for April. And frankly, a couple weeks ago, that really didn't. That seemed like a pipe dream. It really seemed impossible for the markets to come up to the Mendoza line, to the zero line. But it is what it is, and you know what, we pay attention to what markets are doing and follow the trends, follow the momentum, and here's where we are. So with 3 days left to go in the month of April. We have the markets on the edge of turning positive for the month. So far this morning, though, we're down a little bit, right? We were down quite sharply earlier this morning. European stocks were up today. China stocks were a little bit more mixed, and so was Japan. But the S&P 500 was down again about 15, 20 handles. It's only down about 3 handles right now. We have the Nasdaq down about 17, and the Dow barely down about 12 points right now. So yields are rising a little bit this morning. A little bit of selling in bonds. We have the dollar just about flat this morning as well too. So some mixed signals right now. We have volatility rising up a little bit over here. Now, don't forget we have an expiration on the weekly coming up on Friday on the VIX, and then also Friday will be a jobs report and also a pretty good size options. I've looked at some of the open interest there for some of the stuff. So on May 2nd, there's going to be pretty big options. There's going to be a lot of volatility coming into that day's end. But first things first, right? We have a big week coming up here. We don't have any Fed speakers this week. Why is that? Because the following week is the next Fed meeting. I believe it's on the 6th and the 7th of May. We will also have the end of the month coming up, as I mentioned. That'll be on Wednesday. We often see a little bit of window dressing coming into the end of the month, so we may see some of that positioning to the end of the day on Wednesday. Further, we'll have on Wednesday the first look GDP for first quarter. And now, if you've been following some of the media out there talking, financial media, they were talking about where first quarter is going to land. We that people have been talking about the Atlanta Fed GDP now, which is really still sticking with about a negative 2.2% for the quarter. We'll see if that's right. St. Louis Fed, New York Fed, not quite as bearish, not quite as bad. For those two reserve banks, their nowcasting is about 1.5% to 2% for the first quarter. So we'll see who's right on this one, right? I think we're going to come in closer to zero, probably somewhere between 0 and 1%. But that's my view, based on the data that I've been taking a look at. Now, of course, the Fed will be watching that data. They'll also be watching the jobs report, which is coming out on Friday morning before the open, 8:30 a.m. Non-farm payroll report for April. We did have a strong jobs report in March, so we'll see if we can follow up with that, another strong labor report, or if some of the cuts being made at the government level seep into that non-farm payroll report for April. But by and large, the jobs market has been robust, has been strong, has not been giving the Fed any excuses to cut interest rates. So if we do see some weakness over there, and if it permeates for a while, we may see the Fed funds futures crowd starting to get a little bit excited about rate cuts down the road. As of now, the Fed funds futures are pricing in about 4 rate cuts in 2020 5. And again, I just don't see that. As of right now, I don't even see one rate cut coming in. Maybe one rate cut by the end of the year. The Fed's projections were for 2 rate cuts by the end of the year. I still think that unless the data turns where inflation remains sharply lower and heading towards the 2% target, and if we see some weakness in the jobs report, labor report, then we could possibly see some rate cuts. But you've got to have some bad news happen before the Fed starts cutting interest rates. If it's good news on the GDP front, if it's good news on the jobs front, the Fed is just going to stay at 4.25% for the foreseeable future. So that's that. So as I mentioned earlier, big week, not just with the data, but also with the jobs report, but also the end of the month. We also have a huge week of earnings coming out this week. We have 4 of the Mag 7 names coming out, reporting their first quarter. We have Apple and Amazon on Thursday after the close. And then on Wednesday after the close, we'll have Meta and Microsoft. So a couple of big potential big movers here. But don't forget, there's some other big names as well, too. We have McDonald's coming out before the open on Thursday, along with Eli Lilly and Baxter and MasterCard. Oil names, big oil names coming out on Friday after the close. We have Exxon and Chevron, along with Apollo, private equity company. Caterpillar Wednesday morning, which is a Dow Industrials name. Western Digital, I'm looking at ADP. And then tomorrow night after the close, Visa, which is another Dow Industrials name. Starbucks, Snap, First Solar, PPG, Pittsburgh Plate and Glass, Booking Holdings, Corvo. And then tonight we'll have NXP, F5, Teradyne, Nucor, Waste Management. So a lot of names that we have to choose from to watch what's going on with the economy and watch what they have to say about the consumer and retail, and also watching what they have to say about tariffs and the impact tariff policy is going to have on their businesses to the end of the year. So we didn't have a whole lot of news over the weekend about tariffs, so which is probably the reason why we had a little bit of softness in the markets early on. Again, we're starting to rally back over here. We may actually have a positive open when it comes out in about 45 minutes. I did want to mention a couple of charts over here. One especially is this one here. We talked about this one last week. This is the New York Stock Exchange McClellan Oscillator, and we're at a level where we're pretty overbought here right now. So a retreat in the markets should not be surprising to you. So what I would suggest you do, scale back on some of those longs if you have them from last week. Reduce your size, raise some cash, add some puts, because we could have a funky day here or there later on this week where the markets come down and they stay down. You want to have that put protection in place just in case you have a day like that. And put protection is not expensive right now. We have the VIX at, again, about 25%. Just about a week and a half ago, it was about 35 or 40. So protection is a little bit cheaper now than it used to be just a week ago. So have some puts in place. It's not going to hurt you very much, especially if the markets do defy the odds and keep moving upwards. We had 4 up days in a row, and again up about 8.5% in about 4 days. If the markets keep going up, that put protection is in place. It's going to lose value, but hopefully the long stuff that you have in place is going to do well. I wanted to take a look at the VIX as well too. This chart is portraying a downtrend here, and we're right at the 50-day moving average. We're close, slightly below it. That's going to be the battleground over here. So if we get below that 50-day moving average, then we can get, for a few more days, we can get that 20-day moving average, which is this dotted line here. It's starting to crest over here. If it starts to come down, that would be a positive for the bulls. So we're stuck right here. We have a gap to fill, which is right down over here, which is about 22.25. Which would be another 10% down in the VIX, but don't expect that to happen unless there's some news that's driving markets higher. Another chart I want to show you as well too is the VIXN, which is the Nasdaq 100 Volatility Index, and you can see here in a similar spot as the VIX, it's come down quite sharply from the highs. It was around 52 or so. We're about half that much right now. If we get below that 50-day moving average, which is about 27 over here, in the next couple of days, that would be a bullish sign for the market. So I'm kind of in a wait and see mode. Let's see what happens first before we start making large commitments to the markets. We did buy some stuff in the service last week on Friday. Palantir was one of them, and Palantir is doing nicely as well. So Meta's up nicely here. They have earnings coming out Wednesday after the close. Palantir up another buck and change here as well too. One thing to let you guys know, I will be on doing some media tomorrow. I'm going to be heading out to New York City tonight, just before the close, and I will be there tomorrow all day, making an appearance on the desk with Diana King Hall on Schwab Network tomorrow morning, probably about 8:30 or so, 8:40, and then I'm going to be shooting up to Yahoo headquarters. I will be co-hosting with Maddie Mills, the Yahoo Finance Hour from 10 to 11. And then I'm going to be moving right back down to the New York Stock Exchange. I'll be doing Market Navigator segment with, I think, Dom Chu at about 2:25 p.m. on CNBC. So watch for that. It's going to be a lot of fun. Looking forward to doing all that media tomorrow. So I'll be sending some stuff out on social media, but check those websites: Schwab, Yahoo Finance, Schwab Network, and the Yahoo Finance streaming, and then on CNBC tomorrow. So thank you very much for spending a little bit of time with me today. Great to be with you. Hope you guys all had a great weekend, and looking forward to a big trading week here. And I will be back on Thursday morning, May 1st, to chat with you again, talking about markets again. Thanks, everyone. And if you know anybody who might be able to use this video, please pass this along. And I'll see you guys all on Thursday morning. Thanks, everyone. Bye.